Hello, everybody. This is Alan Ellman, the blue collar investor, and welcome to this BCI podcast number 86, titled How to Use Technical Analysis and Market Assessment for Strike Selection. Now, we're going to be analyzing both bullish and mixed technical price charts using stocks Boot Barn Holdings and Teleflex Inc. Now, option selection is the second of the three required skills to master option selling. We have stock selection, option selection, and position management or exit strategies. This podcast will focus in on the second, option or strike price selection. Now, we're going to have a look at the overall market assessment as of January 10th, 2020, and this is prior to the COVID-19 crisis that hit in March of 2020. Now, the general market index or GMI was 5 out of 6. Now, this is a market indicator developed by Dr. Eric Wish of the University of Maryland, where he looked at 6 technical indicators to make an overall market evaluation on a scale of 0 to 6. So it was 5 out of 6 on January 10th, 2020, making it a very bullish picture from this technical perspective. To get information on the GMI index, go to his website, www.wishingwealthblog.com. Now, Investors Business Daily market assessment at that point in time was the market is in a confirmed uptrend. And BCI also had a bullish outlook on the market. So the overall market assessment at that point in time was definitely bullish. Now, if we looked at a comparison chart over the last 3 months of the S&P 500 and the VIX or CBOE volatility index, we would see another bullish technical picture here. Over the last 3 months, as of January 10th, the S&P 500 was up 10%, and the VIX was down 8.79%, as its current reading at that point in time was 12.35. Now, the relationship between the S&P 500 and the VIX is normally inverse. So a lower VIX is bullish for the market and vice versa. This particular case, we see the market ascending by 10% actually in 3 months, and the VIX descending. So again, an overall bullish picture when we look at this comparison chart. Now let's take a look at one stock at that point in time, Boot Barn Holdings, which trades on the New York Stock Exchange on the ticker BOOT. And at that point in time, we would take a look at trend identifying and momentum identifying indicators, which were all bullish. If we looked at the exponential moving averages, we would see, and those who are actually also viewing this podcast, you will see on the top of the chart that the 20-day EMA was ascending and higher than the 100-day EMA, which was the red line. And the price bars were at or above the 20-day exponential moving average. So a bullish trend identifying indicator here. Now, the MACD histogram, which is a trend and momentum indicator, was also above 0. The price bars were the bars were above 0 and ascending, which was a bullish signal. And the stochastic oscillator, another momentum indicator, had been ascending and is now consolidating above the 80th percentile. So overall, as a mosaic, it's a bullish technical chart. Now, to compare that to the chart at that point in time of Teleflex Inc., which trades on the New York Stock Exchange under the ticker TFX, we would see a mixed chart. The exponential moving averages were bullish, but the MACD histogram dropped below 0, and the stochastic oscillator dipped under the 80th percentile. Now, these were not egregious bearish signals, but nonetheless slightly bearish signals. So overall, as an aggregate, we'd have to say that TFX had a mixed technical chart at that particular point in time. Now, how does that lead us to what strikes to select? Out of the money would be more aggressive. In the money would be more defensive. Well, let's say we were selling 5 contracts on the same stock. Well, if we were strongly bullish, as we were on the first chart we showed you, Boot Barn, we might opt for 5 out of the money strikes. What if we were bearish on the stock? What if the overall market assessment was bearish and the price chart was mixed? Well, then we might want the defensive position on all 5 of the contracts to be in the money. What if we were mixed, but we had a bullish bias? In that case, we might ladder the strikes and go 3 out of the money, 2 in the money, or 4 and 1. And what if we were mixed with a bearish bias? Well, we might go 3 in the money and 2 out of the money, or 4 and 1. So these are ways that we can throw the odds in our favor using a combination of both technical analysis and overall market assessment. Let's summarize. Strike price selection is based on a combination of overall market assessment, technical analysis of the individual securities, as well as our personal risk tolerance and goals. We always have to know how much time value are we looking to generate. If we're not tolerant at all to risk, we might opt for all defensive positions, despite what the charts may be saying. So we have to factor all these in. Now, this podcast highlights how the first 2 of these parameters, market assessment and technical analysis, will help guide us to the most appropriate option strike prices. Now, the strike selected and the percentages used will result over time in enhanced portfolio returns when you're applying these 2 principles of analyzing the overall market at that point in time and looking at the price charts at that point in time. Each month or each week, whatever time frame we're using for our contracts, we can reevaluate our bullish or bearish assumptions regarding the overall market and the particular securities that we're leveraging. Before I leave, I just want to remind everybody about the myriad of free resources located on the bluecollarinvestor.com website. Just go to www.thebluecollarinvestor.com. Look for the free resources link on the top black bar of all of our web pages. I want to turn your attention also to the Beginner's Corner tutorials for both covered call writing and selling cash secured puts, which is located on the top right side of our web pages. And don't forget to visit our store where we have a myriad of books, online video programs, calculators, spreadsheets. We have books in ebook format. We have books in soft and hardcover as well, trade planners, online mentoring programs. We have a huge supply of educational products that will help elevate your skill set in mastering option selling strategies. Ladies and gentlemen, thank you so much for taking the time to listen to and, in some cases, watch this BCI podcast number 86, How to Use Technical Analysis and Market Assessment for Strike Selection. Folks, I hope you enjoyed this presentation, and most importantly, I hope it puts some money in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.